Thank you, Peter. It's great to be back. Start off by a quick introduction about myself. I'm the CEO and co-founder of ELMO. It's been a long but very fulsome journey since founding the company in 2002. For those of your viewers who are not familiar with ELMO, I'll start off by giving you a brief overview of the business. We're a leading provider of cloud HR, payroll, and expense management solutions, and we operate in Australia, New Zealand, and the United Kingdom. We have a two-segment solution. We have a fit-for-purpose platform for the mid-market, and that's under the ELMO brand. And we have a fit-for-purpose solution for small businesses, and that's under the Breathe brand. Unique aspects of our business is that we're a very wide, what we call convergent solution, which consists of multiple modules to assist organizations in managing the entire employee life cycle from hire to retire. These modules can be sold singly, or they can be sold as a seamless solution on the platform. They're also really well integrated, so there's no friction of integration when customers buy several modules in one hit, or when they add modules later on in the relationship. Our real competitive advantage is the width of our solution. And just looking at the business modeling for the investors, we have a high proportion of subscription revenue, which is recurrent in nature. We have a high customer retention rate, and most of our growth historically has been organic. And very much with such a wide solution, which is sold modularly, we have what we call a land and expand strategy. So in the first instance, when we land customers with the mid-market solution, the ELMO solution, we'll sell approximately 4 or 5 modules. And then as we go on in the relationship, they'll add additional modules or functionality. So we get additional revenue or wallet spend from that customer. This is similar with the Breathe solution. They start off with a single or 1 or 2 of the modules, and they'll add to that as they go along. Looking at financial snapshot as of Q1 in this financial year, so that's Q1 for this financial year, we saw our annualized recurring revenue come in at $88.5 million, which is a 61% growth on the prior comparable period. We saw revenue come in for the quarter at $20.7 million, which is up 52% from Q1 in FY21. And we saw record cash receipts come in at $27.7 million, which is up a whopping 78% from Q1 in FY21. Most importantly, if we look at our organic growth, that's the growth of the business without any of the effects of the acquisition. In Q1 FY22, that came in at 35%. And at the end of the quarter, we remain well capitalized with $75.7 million on our balance sheet. As of the end of Q1 and going into our AGM, I took the opportunity of reconfirming or reaffirming our FY22 guidance. If we look just going historically, we have been a high growth company. So if we look at the point of when we listed on the stock exchange to the most recent quarter, we can see that on an annual basis, on that annualized recurring revenue growth, it's been 43% per year. So that's very high, consistent growth. And as we're coming out of COVID, we're seeing the growth tick up as was experienced in that first quarter update. Again, if we look at strip out the effects of the acquisitions, we see that organic growth coming in at 32% per annum since IPO. So even without acquisition, still very high growth. So that's where we want to be. We want to be scaling, we want to be high growth, and we're delivering on that growth strategy. We'll look now at our annualized recurring revenue growth. I'm going to break it up in this bridge. So the first thing is we separate the mid-market growth that's under the ELMO brand from the small business growth that's under the Breathe brand. And if we have a look at it, is our organic annualized recurring revenue growth in ELMO came in at 28%. So again, as we've come through COVID, we're returning to our higher levels of pre-COVID growth. And if we look at that acquisition of that small business platform, the Breathe platform, that came in at 55%. That's on an organic basis. So again, very high growth. And it's a very interesting segment to have entered into. A lot of manual process amongst small businesses, and that Breathe platform is offering them that bridge towards automation. If we look at it on a group level, on a blended basis between the mid-market and small business, we see our organic growth coming in at 35% in Q1 on FY22. I'll go into a little bit about our growth strategy. We have a 3-pillar strategy for growth. We have segment expansion, module expansion, and geographic expansion. So we're not dependent on one area of our growth strategy. We've got, I suppose, the comfort of having 3 areas, but they're actually all working very well at the moment. So I'll start off with segment expansion. And again, just to remind you, we've got 2 key market segments. We've got the ELMO fit-for-purpose solution, which is there to automate HR and payroll process for mid-market type organizations. And we have the Breathe solution, which is fit for purpose for smaller businesses. Now, if we look at the mid-market solution, currently we have over 3,000 customers. So we have a critical mass of customers. We've got great brand recognition in Australia and New Zealand. We've just launched in the UK, but that's growing. But very importantly, if we look at our market penetration, in ANZ, it's still less than 8% of available customers. And in the United Kingdom, it's less than 3%. So there's lots of headroom for growth. If we look at the amount of customers we have on the Breathe platform, we have over 9,000 customers. But again, a huge amount of headroom for growth because we've got less than 3% penetration. So really important here as we expand in these segments is that we have critical mass, but we have a lot of headroom for growth. Moving on to module expansion. Again, we've split it up on the slide between the modules we have in the ELMO offering, that's the mid-market offering, and in Breathe, the small business offering. And really the important thing is that all these solutions or the functionality, it is sold modularly. So it means that a customer can pick and choose which modules they need in their initial purchase. And then depending on their needs going forward and their budget, they can add to it. So it really facilitates that land and expand strategy, and it gives us the ability to increase the wallet spend for the customers. Now, very important as well, the width of the solution is a competitive differentiator. So if we look at that ELMO solution, we have 19 modules now, which go through that entire employee life cycle. And that differentiates ourselves from other vendors in the marketplaces, that breadth of the solution, and also the interoperability or the integration between the modules in that solution. Again, similarly with Breathe, we're sort of earlier in that journey. Currently, we have 4 modules, but again, it is a differentiator with those point solutions who just offer HR, rostering, learning, or payroll. Moving on to geographic expansion. And I suppose the big news item here is our expansion into the United Kingdom. We did this via 2 acquisitions in the calendar year 2020, in the middle of COVID. So it was a bold move, but it's really having a great return for us. So with the small business, we acquired Breathe, which is a fit-for-purpose solution for small businesses. As I said, over 9,000 customers in the United Kingdom. Now we've value added there in terms of adding additional modules, which we've contextualized from our mid-market offering for those small businesses. So that's a big part. We've got a great operational footprint with that Breathe business in the United Kingdom, and we're experiencing fantastic growth. So as I mentioned before, over 50% on an annualized recurring revenue basis. Looking at the mid-market, our expansion to the United Kingdom has been facilitated by the acquisition of Web Expenses, which was an expense management solution. over 1,000 mid-market customers in the United Kingdom, over 75 employees. So a great operational footprint there, existing client base, and it's allowed us to launch the ELMO HCM modules, or the ELMO mid-market offering, into the United Kingdom. Obviously, we first going after the low-hanging fruit. That's the existing customers, the existing web expenses customers. And again, just launched that at the beginning of this financial year, but we've got a lot of those conversations well progressed, and we expect to see the first ELMO mid-market customers appearing before our half-year results. So again, a significant expansion of our addressable market through geographic expansion. If we have a look at I suppose the numbers around the size of our total addressable market, in total, it's a $12.8 billion opportunity. We've broken it up in these diagrams between the Breathe small business segment and the ELMO mid-market segment. And what we can see just through our module expansion and our geographic expansion is we've increased the size of that potential addressable market. So I think the big takeaway from this slide is, though we've grown substantially over the last 4 years since we listed on the Australian Stock Exchange, is the big growth remains ahead of us. We've got lots of headroom to grow. And I'll end off by going through our FY22 guidance. So we're well into the year. And as I mentioned before, around our AGM, which we've just had, we took the opportunity to reaffirm this guidance. So I'll take you through it very briefly. If we look at annualized recurring revenue, that's that pyramiding revenue which goes on from year to year from our subscriptions. We've guided to between $105 and $111 million. So our growth year on year will be somewhere between 25 to 33%. So that's, again, high growth off our higher base, which shows the health of the business. If we look at revenue, we've guided to between $90.5 million and $95.5 million. Again, high growth there, but it will land somewhere between 31 and 38% on a year-to-year basis. Now, I must add that the guidance is purely on an organic basis. It doesn't factor in any potential acquisitions. So that's just pure organic growth. So very, very strong in this financial year. And then finally, if we look at the profitability, if we look at the EBITDA, we've guided to between positive $1 million and positive $6 million. And that's coming from a negative EBITDA in the previous year. So again, we're starting to see our cost ratios come down. We're starting to see, with scale, going through that $100 million ARR milestone, we're starting to see those cost efficiencies come in with scale. And it's put us on that path towards cash flow break even. So I think I'll end there. Thanks for the opportunity, Peter, and I'll hand it back over to you to take some questions.